Imagine that, you're one of the most powerful bankers in the world. Kings bow to you. Popes need your approval. You control more wealth than entire nations. And then, in a single afternoon, it all vanishes. Not because of a stock market crash. Not because of a housing bubble. But because one king simply said two words, "I refuse." This is the story of the 1340s banking collapse, when the world's most sophisticated financial system imploded, dragging an entire continent into economic chaos. And here's the twist. It happened 700 years ago, but the exact same pattern is playing out today. Let's rewind to medieval Europe, because that's where modern banking was born, and where it first died a spectacular death. The year is 1300. While most of Europe struggles with feudalism and warfare, northern Italy is booming. Florence, Venice, Genoa. These cities are financial superpowers. At the center, two banking dynasties that would make Wall Street look like amateurs. The Bardi family and the Peruzzi family. These weren't just moneylenders. They invented international banking. The first global money transfer system, moving funds from London to Rome without physically transporting gold. Credit networks spanning from England to the Middle East. Private armies protecting trade routes. By the 1330s, the Bardi was the largest bank ever seen in medieval Europe, 50% larger than their closest rival. Branch offices everywhere. Venice, Rome, Barcelona, London, Bruges. Their clients? Popes, kings, emperors. And that's where the trouble started. Enter King Edward III of England. Young, ambitious, and extremely expensive. Edward had a dream: conquer France and unite both kingdoms under his rule. But war costs money. Lots of money. So in the 1330s, Edward went to the banks. And the Bardi and Peruzzi said yes. Not just a little yes. A massive all-in bet the entire bank yes. Between 1338 and 1345, the Bardi lent Edward 900,000 gold florins. The Peruzzi lent him 600,000 florins. Let me give you context. Edward's entire annual royal revenue was only about 200,000 florins. He borrowed 7.5 times his entire annual income. The banks were confident because Edward had collateral: England's wool trade. England in the 14th century was the Saudi Arabia of wool, Europe's most valuable commodity. The Bardi and Peruzzi controlled the export licenses for English wool. On paper, this was the deal of the century. Except nobody calculated what would happen if Edward lost. And Edward started losing. Badly. The 100 Years' War began in 1337 and didn't go according to plan. Early campaigns were expensive disasters. Costs spiraled out of control. By 1340, Edward's treasury was empty. But here's the trap: the banks couldn't stop lending. Because if they cut Edward off, he'd default on everything they'd already given him. So they lent more. And more. Throwing good money after bad, the same trap that destroyed banks in 2008. But Edward never got his victory. And in 1345, Edward did something that would echo through financial history for 700 years. He refused to pay. Not, "I need more time." Simply, "I'm not paying you back." This wasn't bankruptcy. Edward had assets. He just decided that repaying foreign bankers wasn't politically convenient. He framed it as patriotism. And with one royal decree, the world's two largest banks were doomed. The Peruzzi collapsed in 1343. The Bardi in 1345. And when they fell, they didn't fall alone. These banks held deposits from wealthy individuals across Italy. When they collapsed, all that money vanished. Florence went from financial capital to economic freefall overnight. Credit froze. Trade networks collapsed. Thousands of businesses went bankrupt. The ripple effects spread across Europe. Europe's first sovereign debt crisis. A government with power simply refused to pay, and the entire financial system imploded. But wait, it gets worse. Just 2 years later, disaster struck again. The Black Death arrived in 1347. Florence's population dropped from 120,000 to 50,000 by 1351. Across Europe, 1/3 to 1/2 of the entire population died between 1347 and 1353. 4 bankers trying to recover, the plague was the final nail in the coffin. Half your borrowers were dead. Records lost. The wool trade collapsed. The global economy wasn't just damaged. It was shattered. Europe's wealth had effectively vanished. But here's where the story takes a fascinating turn. While Europe descended into chaos, on the other side of the Mediterranean, an African emperor was about to flood the world with more gold than Europe had seen in a century. His name was Mansa Musa. In 1324, Mansa Musa, emperor of the Mali Empire, embarked on a pilgrimage to Mecca with 60,000 people and roughly 11 metric tons of gold. Everywhere he stopped, Cairo, Medina, Mecca, he spent gold like water. The result? In Cairo, the gold market collapsed. Too much supply. The value of gold fell by 12% and stayed depressed for 12 years. This was possibly the first recorded instance of inflation caused by a single person. Europe heard about this. In 1375, the Catalan Atlas featured Mansa Musa prominently, calling him the richest king in all these lands. Europeans realized, there's an African empire richer than any Christian kingdom. And that terrified them. Here's the connection. After 1345, Europe was broke. Meanwhile, Africa had gold. Mali controlled over half the world's gold supply. Europe desperately needed that gold. But the banking network that could have financed expeditions to West Africa no longer existed. This frustration became one of the driving forces behind the Age of Exploration. Columbus set sail because Europe ran out of money. But back in Florence, something remarkable happened in the ruins. A new generation of bankers emerged. Chief among them, the Medici family. In 1397, Giovanni di Bicci de' Medici founded the Medici Bank. But he'd learned from watching the collapse. The Medici developed a completely different model. Don't lend too much to any single client. Decentralize, create legally separate branches. Control politics, don't depend on it. Innovate. They pioneered double-entry bookkeeping, the accounting system still used today. These innovations transformed banking from a gamble into a science. By the mid-15th century, the Medici Bank was the largest and most respected financial institution in Europe. The crisis hadn't just destroyed banks. It had created a laboratory for financial innovation. Now here's why this matters today. Because the pattern hasn't changed. The anatomy of the 1340s crisis matches modern financial disasters perfectly. Step 1. Excessive lending to risky borrowers. Bardi and Peruzzi lent 7 times Edward's income. In 2008, banks lent to people who couldn't afford mortgages. Step 2. The too big to fail trap. Once you've lent so much that default destroys you, you lend more hoping to salvage your investment. Step 3. Systemic interconnection. When the big banks fell, they took down hundreds of smaller businesses. In 2008, Lehman Brothers triggered a global crisis. Step 4. Sovereign risk. Governments can always default. Edward did it. Argentina did it multiple times. Greece nearly did in 2015. Step 5. External shocks amplify crises. The Black Death turned a financial crisis into catastrophe. COVID turned a downturn into a global emergency. The names change. The technology changes. But the pattern remains identical. Here's the uncomfortable truth. The financial system isn't built on money. It's built on trust. Trust that borrowers will repay. Trust that banks will honor deposits. Trust that governments will respect contracts. When that trust breaks, everything collapses. Edward shattered trust in 1345. Governments shattered trust in 1929. Banks shattered trust in 2008. And trust, once broken, takes generations to rebuild. So what's the takeaway? The ancient banking crisis teaches us crucial lessons. No institution is too big to fail. The Bardi and Peruzzi seemed invincible. They weren't. Sovereign debt is always risky. Kings with armies can refuse to pay. So can modern governments. Interconnected systems amplify both growth and collapse. External shocks transform financial problems into civilizational crises. Innovation comes from necessity. The Medici's innovations came from studying failures. And crises reshaped the world. The 1345 collapse helped trigger the Age of Exploration. We live in the most interconnected financial system in human history. When the next crisis comes, and it will come, it will follow the same pattern. Overlending. Overconfidence. Broken trust. Systemic collapse. 700 years ago, 2 banks lent too much to one king. He refused to pay. The system collapsed. The world changed forever. The crisis was forgotten. But the pattern remains. So the next time someone tells you the financial system is too sophisticated to fail, remember the Bardi and Peruzzi. Remember that the richest banks in the world collapsed because of one man's refusal to pay. Remember that trust is the only thing holding the entire system together. And remember, history doesn't repeat, but it absolutely rhymes. If this story changed how you think about modern finance, hit that like button. Subscribe for more deep dives into forgotten crises that shaped our world. And drop a comment. What surprised you most about the 1345 banking collapse? Thanks for watching. See you in the next one.